thank you for participating in the not-for-profit organizations session that's put on by Ian Rennie of the Department of Justice. A couple of reminders. If you've got any questions, could you please send them to me? I'll be moderating this session through the chat function in Zoom, and I'll get them to Ian. Also a reminder, we are recording this session, and later this afternoon it will be up on the Law Society YouTube channel. Ian has a PowerPoint presentation, and the PowerPoint will be up on the YouTube channel as well with the video. All right, with that, Ian, over to you. Ian, you're muted. Just a sec.
Thank you, Glenn. For those who don't know, my name is Ian Rennie, and this CPD, or Continuing Professional Development seminar, is entitled Not-for-Profit Organizations and Lawyers, but it's equally applicable to others. Before I start, I'd like to make some acknowledgements. I would like to acknowledge that we are on the traditional territory of the Yellowknives Dene and Chief Dry Geese Territory as part of Treaty 8 in Yellowknife Northwest Territories. We also acknowledge that this land is the traditional territory of the Cleachow and North Slave Métis Alliance. In case you're wondering about the symbols in Cleachow, those are called diacritics, and we have a specific font that makes them show up. It's called Winmac Seal Dulles Dene, but it was not installed on this Law Society computer, but there is a way to do that. I did a screen capture and pasted it in. So there's various sources which have been used to construct this presentation, and this is a list of them with their hyperlinks. And the most important ones of interest are, I think, the Canada Not-for-Profit Corporations Act, the federal statute, and the other one is the Societies Act, a territorial statute. Provinces and other territories have similar acts. And of course, the Canada Not-for-Profit Corporations Act deals with federally incorporated not-for-profit corporations. Nothing in this CPD represents any opinion, legal or otherwise, of the GNWT, the Law Society, or any entity or individual. The presenter, that's me, I am not an accountant. This CPD is for informative and educational purposes only. This is the outline. We'll first explore the nature of a not-for-profit organization, the advantages of incorporation, some income tax considerations. That's the Income Tax Act of Canada. We'll briefly go through corporate searches. We've got some examples of various not-for-profit organizations. There's a whole aspect of professional responsibility to this CPD, so it's quite rich on ethical considerations. We'll deal with fiduciary duties, compensation, types of not-for-profit organizations. There is some academic thinking on this. Jurisdictional issues, primarily federal versus provincial or territorial. Directors' liability and duties. The Northwest Territories Code of Conduct for Lawyers, who are directors of NPOs. Duties and accountability. Directors' insurance through the Law Society of Northwest Territories. In fact, it's outside directors' insurance. The Trump Foundation is a sterling example of how things can go awry. And there is a Canadian example as well, the Banyan Tree case. I would like to focus on financials, time permitting, and the basics of accounting, what are financial statements and their filing requirements. And then we might have a quick look at the example of the Law Foundation of the Northwest Territories, their latest financial statements, which are public. There'll be a conclusion, and then we'll have a question session or discussion session. So this is a fairly involved CPD. First of all, the nature of an NPO. So here is an extract from Section 2 of the Societies Act, Northwest Territories, and it talks about incorporation. You'll notice certain keywords in there: benevolent, philanthropic, charitable, religious, provident, scientific, artistic, literary, social, educational, sporting, and other useful purpose other than carrying on a trade or business. Okay, so that exception is very important. Other than carrying on a trade or business. If you are carrying on a trade or business, then one can register under the Business Corporations Act of the Northwest Territories, or perhaps under the Partnership and Business Names Act of the Northwest Territories. There's also the concept of a sole proprietorship. So we're looking at corporate structures. The Canada Not-for-Profit Corporations Act is a federal statute, and there are similar provisions in there that talk about that. I've just put in a question mark of associations. So you might consider associations whether or not they could be incorporated. Many are not. So for example, the Uniform Law Conference of Canada is not incorporated federally or provincially, but it still exists. Advantages of incorporation. There are many advantages to incorporation. These include the not-for-profit corporation has a legal status separate and distinct from its members. Members may come and go, but the corporation continues until it is dissolved or wound up. The not-for-profit corporation can enter into contracts, buy and sell property, it can buy or sell property, and it can also own bank accounts, for example. Individual members of a corporation are generally shielded from liability, limited liability to the extent of their membership fee. Formal corporate structure facilitates ongoing operations and decision-making. There may be increased credibility with government, funders, and the public. The not-for-profit corporation also has an enhanced ability through its governing documents to address membership status issues. For example, removal of members who have not paid their dues or have died, or expulsion for disciplinary reasons. The Societies Registry provides an authoritative record of what are the bylaws, documents, and so forth, both for the public, the society, and the membership, not just in case of dispute, but also sometimes there are problems with volunteer organizations maintaining corporate records, or at least society records. This slide has been largely composed from some information found online through what was formerly known as Industry Canada. The disadvantages of incorporation. There are some disadvantages to incorporation. Those mostly include most jurisdictions require an annual corporate filing related to the location of the head office as well as the director information. Some not-for-profit entities must file an annual information return with CRA, that's our income tax people, federally. Incorporated not-for-profits, except for registered charities, must file an annual corporate income tax return. Federal corporations incorporated under the Canada Corporations Act, well, this is actually corporations, not for nonprofit ones, must get ministerial approval to change certain bylaws. I would have to do a bit more research to see if that's applicable to not-for-profit organizations that are registered under the Canada Not-for-Profit Corporations Act. There may be some constraints placed on the type of activity that the group or entity may engage in. There is a need to devote time and resources to maintaining corporate structure that would otherwise go to carrying out the desired purposes or activities of the organization. And filings are often required, and failure to file might result in the NPO losing its legal status, what is commonly referred to as being struck from the Societies Register, at least on the territorial side. Income tax. So what is a non-for-profit or non-profit organization? An NPO, as described in Section 149 of the Income Tax Act Canada, is a club, society, or association that is not a charity and that is organized and operated solely for social welfare, civic improvement, pleasure or recreation, any other purpose except profit. To be considered an NPO, no part of the income of such an organization can be payable to or available for the personal benefit of any proprietor, member, or shareholder, unless the proprietor, member, or shareholder is a club, society, or association whose primary purpose and function is to promote amateur athletics in Canada. An NPO is exempt from tax under Part 1 of the Act on all or part of its taxable income for a fiscal period if it meets all of the above requirements for that period. So some examples of not-for-profit organizations. Under the Societies Act, an example could be the Yellowknife Amateur Radio Society, the Northwest Territorial Pipe Band. I'm involved in both of those, and so forth. There is the Corporate Registries Online System, CROS. Is that how you would? CROS, CROS. It's commonly referred to as CROS. This is Matthew Yap. He is the director there. Details of directors and of registration are contained in CROS. It's useful for legal actions and service, much like corporate service searches. In fact, it's the same system. So here is an example of a CROS search for Yellowknife Amateur. And there you see it, the Yellowknife Amateur Radio Society. The full name is there. So if you are preparing a statement of claim, for example, against the Yellowknife Amateur Radio Society, you have its full legal name. You also know that its status is active, so it's in good stead with the corporate, or at least with the society's registry. Here is an example of the pipe band. So you can see just from this that the Northwest Territories Pipe Band is also an active society, and it actually changed its name. It used to be at one time called the Yellowknife Pipe Band Association. You can log in to view. You can see that button there, these buttons, but you have to actually have an account with the society's registry. You'll see a CROS account, is that right? Yeah. And that will probably require some sort of subscription fee. Federal incorporations. Industry Canada provides a similar sort of search, or Corporations Canada, and it's at that hyperlink. It's useful again for actions of service, creditor actions as well. So here's one where I searched Royal Canadian Legion. Okay. And two entities appear. One, the second one is what I was after, and you can see that it is active and that there's a corporation number and a business number. So those are quite interesting. But it doesn't have branch number 164, which is the local Legion branch. One would have to check the bylaws of the federal entity, and if you did that, you would find that local branches of the Legion are not allowed to actually set up societies under provincial or territorial laws. That's a prohibition in their bylaws for whatever reason. So if one was exploring an entity like this, one should really check out the foundational statute. In this case, the Royal Canadian Legion was created by a statute in July of 1926, a federal statute, and it's an affiliate of what was then the British Empire Service League, which is now the Royal Commonwealth Ex-Services League. There are provincial organizations, they call them provincial commands, but they all are affiliates of that federally incorporated entity. The branches in the provinces have a charter. Branches have their own legal personality stemming from their relationship with the federal entity called Dominion Command. And if you're interested, here are some hyperlinks. One should also be aware that there could be other things of interest to you as a potential director, for example, lottery funding. The Lotteries Act in the Northwest Territories, or the Yellowknife Lottery License Bylaw. There is, in the case of the Legion, there is something called a Poppy Fund, which is a CRA registered charity. And that takes us into the realm of both trust law and charities. So lots of interesting things there for somebody who is a director and a lawyer. This is just a map of the different entities that are affiliated with the Royal Commonwealth Ex-Services League. Here is another result from the search, a more detailed result with the Industry Canada search. And you can see that we actually have a list of various directors. We have details of the annual filings, and we can actually request documents as well for a fee, and that's what these buttons relate to. So it's very similar to the CROS system, but on the federal level. And of course, provinces have a similar system, and even American states. So here I've done a search for the Native Women's Association. Okay, I was actually looking up Native Women's, and we have here the Native Women's Association of Canada. Okay. In Yellowknife, if you have ever had any interaction with this entity, it's actually the Native Women's Association of the Northwest Territories, and they have a website. And if you were to do a CROS search, we'll also find that they are registered in the Northwest Territories as a society. So it's a slightly different arrangement than what you found in the Legion, but they are also affiliates of the Native Women's Association of Canada. And there's the CROS registration information. You can see that it even had a former name. Practice tips. So it's best to do some research into the organization and its nature. Do not rely on what other directors say, because they may not understand bodies corporate or even the nature of the organization in which they serve. Look at corporate searches, bylaws, articles of incorporation, and the Society's registry for authentic and authoritative documents. You as a lawyer have enhanced fiduciary duties as a director, but you also have an educational duty to teach about the law, and this is sort of ties into concepts of access to justice. Professional responsibility. Outside interests in the practice of law. A lawyer who engages in another profession, business, or occupation concurrently with the practice of law must not allow outside interests to jeopardize the lawyer's professional integrity, independence, or competence. So the commentary is kind of interesting. A lawyer must not carry on, manage, or be involved in any outside interest in such a way that it makes it difficult to distinguish in which capacity the lawyer is acting in a particular transaction, or that would give rise to a conflict of interest or duty to a client. Now, I realize that if you are a director serving on a board of a not-for-profit organization, the relationship between you as a lawyer and the entity is not necessarily that of a client. The relationship is as a director. That said, one still has to keep in mind that you are a lawyer. When acting or dealing in respect of a transaction involving an outside interest, the lawyer should be mindful of potential conflicts and the applicable standards referred to in conflicts rule, and disclose any personal interest. A lawyer must not allow involvement in an outside interest to impair the exercise of the lawyer's independent judgment on or behalf of a client. So here we talk about outside interests. When the outside interest is not related to the legal services being performed for clients, ethical considerations will not usually arise unless the lawyer's conduct might bring the lawyer or the profession into disrepute or impair the lawyer's competence, such as if the outside interest might occupy so much time that the client's interest would suffer because of an inattention or lack of preparation. I think the first part of that commentary is actually quite important, because it is possible for ethical considerations to arise where they do bring the lawyer's conduct or the profession into disrepute. So for example, suppose that the board of directors overruled you as a director and decided to do something untoward or even illegal. What do you do? Fiduciary duties. A fiduciary is someone who has undertaken to act for or on behalf of another in a particular matter in circumstances which give rise to a relationship of trust and confidence. The distinguishing obligation of a fiduciary is the obligation of loyalty. The principal is entitled to the single-minded loyalty of his fiduciary. This core liability has several facets. A fiduciary must act in good faith. He must not make a profit out of his trust. He must not place himself in a position where his duty and his interest may conflict. He may not act for his own benefit or the benefit of a third person without the informed consent of his principal. This is not intended to be an exhaustive list, but it is sufficient to indicate the nature of fiduciary obligations. They are the defining characteristics of a fiduciary. And this is basically an extract from an English case, Bristol and West Building Society, and it echoes the classic case of Keach and Sanford. Because these are, particularly that case is a very old case, you'll find that the language is a little bit gender specific. Fiduciary duties as a director. For-profit and not-for-profit directors share a legal responsibility to act in the best interest of the corporation. However, the stakeholders in not-for-profit corporations do not share the pecuniary interest that binds together those involved with a for-profit corporation. Remember, for-profit, the aim is to make a profit. Not-for-profit, it's not. Having volunteer board members and often volunteers carrying out the corporation's operations means the dynamics of governing a not-for-profit corporation differ markedly from those of a for-profit entity. In some jurisdictions, thought has been given to enacting statutes that would empower not-for-profit directors to consider stakeholders or community interests in their decision-making. However, this approach has generally been rejected. I suppose people might remember the old equity concept that the law always aids the volunteer. So we've got that sort of in operation as well. The lack of compensation problem. In a for-profit corporation, it is assumed that those with an interest in the entity and will be satisfied with economic compensation, either through distribution of income over time or through purchase of their shares. No such straightforward mechanism exists in a not-for-profit corporation. Not-for-profit corporations pursue purposes that are less tangible and therefore hard to quantify. This makes it much more difficult to measure the performance of the corporation and of the directors. Recognizing this, not-for-profit directors should always try to be closely attuned to the views and interests of the members of their corporation and stakeholders. Failure to do so is apt to result in one or both of two outcomes. Either the members of the corporation will lose their commitment to the corporation, or different factions promoting their own agenda will develop within the corporation. When this happens, the smooth operation of the organization is hampered, or in extreme circumstances, the existence of the corporation is at risk. So there are some ways to classify different types of not-for-profit organizations. And at the territorial level in most provinces, there really isn't a lot of legislation on this. Ontario has a charitable and non-charitable organizations Act. I think it's called the Charities Accounting Act. The UK has something similar. It is an active project with the Uniform Law Conference of Canada. In the United States, they view three classes of NPOs. The mutual benefit organization, which its primary objective is in the interest of its members. The public benefit organization, so charities that are not religious organizations, and then religious organizations. On an academic level, public benefit, NPOs, mutual benefit NPOs. And what I've done is I've tried to think about some of the examples we brought up earlier. So the Law Society is an interesting one. What is the main purpose of the Law Society? Is it a public benefit NPO or is it a mutual benefit NPO? And remembering that the Law Society is also the regulator of the legal profession, and one can think back to the Legal Profession Act Review Committee report, where they were looking at things such as the mandate of the Law Society. And the mandate seems to me to be very much in the realm of a public benefit NPO and less so of a mutual benefit NPO. There are some provisions in the Legal Profession Act that might characterize it as a mutual benefit NPO, but I think those are archaic. And for more information, you could go to that review committee report. The Amateur Radio Society is certainly for the mutual benefit of not-for-profit organizations. It's for the mutual benefit of amateur radio operators. And Native Women's Society of Northwest Territories, it's probably for mutual benefit. Anyway, it's something to think about. Why does the Law Society of the Northwest Territories fall under both, and should it? Directors need to know the mandate, the mission, the customer, what the customer values, and what the results should be, and what is the plan. On the federal jurisdiction side, federal incorporation, we've got the income tax registration as a charity, and there are some others. For example, port authorities are regulated by the Department of Transportation. They're still not-for-profit organizations unless their intent is to actually do a profit. And competence is shared with the provinces for sales and consumption taxes. GST is a consideration. And trade and commerce and privacy across Canada, well, that's a federal power. On the provincial jurisdiction side, we've got supervision of charities, which is also an active project in the Uniform Law Conference of Canada. Fundraising, gaming and lotteries, professions, property taxation, language, registration, funding, regulation, and then of course, freedom of information and privacy. Accountability. So there was this report produced in 1999 called the Broadbent Panel, which identified 8 tasks required of boards and of charities and public benefit not-for-profits to further develop effective governance. And you can see that these things we've already covered in some detail: steering toward a mission and guiding strategic planning, being transparent, communicating, developing appropriate structures, ensuring the board understands its role and avoids conflicts of interest, maintaining fiscal responsibility, ensuring effective management team, implementing assessment and control systems, planning for the succession and diversity of the board. Now I've put maintaining fiscal responsibility in red font because that's the one I chose, which I think is quite often problematic, especially for directors in not-for-profit organizations who might not have much of an accounting background. For a lot of the private practitioner lawyers, they probably do have some knowledge of accounting because they have to maintain trust funds as well as perhaps even run a law practice. And so this should be old hat for them. These tasks highlighted in this list could be elaborated at length. Each organization should look at its own circumstances to determine what should be focused on. The role of the directors. So I've just put in red font what I thought was the important part of this. Board members must be, or at least become, knowledgeable about the business and financial affairs of the corporation. Where the corporation is a charity, the board has a heightened duty of care with respect to the protection of its charitable property. The board must also comply with relevant statutes and the rules established under common law governing the director's duties. So at its core, their duties are an obligation of loyalty, honesty, and good faith. And then there's really 2 branches: duty of care and duty of loyalty. Duty of care imposes on directors a duty of competence or skill. What level or skill must a director demonstrate? What level or kind of diligence? For not-for-profit corporations, the answer to these questions are to be found in any one of the following sources: the legislation, court decisions, so that's common law, non-corporation laws and statutes which impose additional specific on duties on directors. In trust, so that would be like the bylaws. In trust law for not-for-profit directors of a corporation organized to pursue charitable purposes, so trust law. In Quebec, directors' duties can be found in the Civil Code of Quebec. It is generally accepted that a heightened duty of care is owed by directors of a charitable not-for-profit corporation. We call duty of care that should ring bells about torts and negligence. I've got some cases here. Reception of Anne's Merton into Canadian law. So this is all basic tortious negligence type stuff. I won't bore it with you, but well, first one has to ask whether, as between the alleged wrongdoer and the person who has suffered damage, there's sufficient relationship of proximity or neighborhood, such that in the reasonable contemplation of the former, carelessness on the part of on his part may be likely to cause damage to the latter, in which case a prima facie duty of care arises. So the duty of care arising. Secondly, if the first question is answered affirmatively, it is necessary to consider whether there are any considerations which ought to be negative or reduce or limit the scope of the duty to whom the duty is owed, or damages should the breach happen. So the UK has been backing away from this due to a conservative climate in the UK, but Canada has not. Duty of care, duty of skill or competence, reasonably prudent person. For lawyers, Section 3.1 of the Law Society Model Code is of interest. And here I've got some extracts. So here I'm first of all looking at 2.1, integrity. The lawyer has a duty to carry on the practice of law and discharge all responsibilities to clients, tribunals, and the public and other members of the profession honorably and with integrity. Dishonorable or questionable conduct on the part of a lawyer in either private life or professional practice will reflect adversely upon the integrity of the profession and the administration of justice. Whether within or outside the professional sphere, we are of course generally outside of the professional sphere, if the conduct is such that knowledge of it would likely impair the client's trust in the lawyer, the society may be justified in taking disciplinary action. That's the Law Society. Collectively, lawyers are encouraged to enhance the profession through activities such as acting as directors, officers, and members of not-for-profit or charitable organizations. So that's very interesting because we've got two conflicting things that need to be reconciled. Enhanced duty of care for lawyers as a director of a corporation. But what about an NPO? If in an NPO there are volunteers, does it matter to the model code? So I pose that question. Enhanced duties for lawyers, okay. And here's a little extract from a newsletter from Osler, a law firm. It's not to suggest that professionals who serve on boards of directors are required to provide professional advice. For example, the role of a lawyer on a board is to offer business advice and judgment, not to give legal advice. Legal advice should properly be provided by counsel to the corporation who is an expert in the relevant area of law. However, lawyers who are directors may not ignore legal issues which they recognize or fail to use their legal training to question closely the legal advice given by the corporation's counsel. And for outside directorships, the Law Society actually has coverage for members who are outside directors. And at the end of this presentation, I can show you the insurance policy for those who remain. And just some highlights of that director's liability insurance. It may be unique to the Law Society of Northwest Territories, I'm not sure. It's aimed at promoting 2.1-2 commentary, which we saw. And it is a benefit to the Northwest Territories community to have a lawyer on the board of directors. It does not discriminate between the corporation, so a for-profit entity, and a not-for-profit entity. It just talks about outside entity. And so that's kind of interesting. The duty of diligence refers to the obligation of directors to educate themselves about the corporation's mandate and all aspects of its operations. It is not enough to merely attend board of directors meetings. The duty of diligence requires active and concerted effort on the part of directors to be knowledgeable and ready to make informed decisions affecting the corporation. So here's a list of various things about the duty of diligence. I've sort of highlighted a couple of them in red. So be thoroughly informed, financial reports and information, carefully review all reports relating to the corporation's financial affairs, including interim financial and year-end statements, and if necessary, get accounting advice. The reason I highlighted these is because my intent is towards the end of this presentation to start looking a little bit closer at financial aspects. The duty of loyalty requires that a director act honestly and in good faith and in the best interest of the corporation. The duty of loyalty is a personal duty and cannot be delegated, the no delegation rule. Among other implications, it means the director is not allowed to profit from his or her office, the no profit rule, and must avoid all situations in which his or her duty to the corporation conflicts with his or her interests, the no conflict rule. So this just goes into more detail about the duty of loyalty, okay? Good faith, trust, and special confidence. The director must always act and use his or her powers in the best interest of the corporation. This prohibition on delegation. The director will never be able to discharge his or her obligations in a meeting of the duty of care if the director has acted in bad faith, intentional dishonesty, incomplete or misleading representations, or acting from an improper motive. All of those can be characterized as bad faith. Good faith is a requirement at the core of fiduciary relationship and requires the director to act with pure intentions and with a view to serving the best interests of the corporation. Directors may not abuse their powers by exercising them for a proper purpose. Okay, it's all kind of common sense. The duty of honesty and good faith has various practical implications. So here's a list of them, and again, I've put some in red font. Accurately represent the corporation's financial or other position, maintain adequate or accurate books of account, record minutes of the corporation, fulfill the terms and restrictions of any special purpose trust fund maintained by the corporation honestly and in good faith. So here's an org chart, an organization chart, I suppose, or a thematic chart, classifying fiduciary duties, duty of care, duty of loyalty, and then the various things under that. Director's liability. So the director could be held liable. There's liability in contracts, liability in tort, liability for breach of fiduciary duty, liability for breach of trustee duties, common law liabilities. So typically directors acting without proper corporate authority, statutory liabilities, okay, under legislation. My message here is do not be put off by all of this. It seems like it's a little bit on the negative side. Why bother volunteering for a not-for-profit organization? While it is a bit of a legal minefield, at its core is corporate governance for NPOs, but also for business corporations. And my theory about not-for-profit organizations is that they are an ideal place, first to serve the community, and second of all, for people to gain experience on the nature of corporate governance in a relatively low-risk environment, which could come back to be extremely useful when you do engage in corporate governance at a higher risk level and outside of the scope of not-for-profits, but for-profits. An example, the Trump Foundation. So there was a Washington Post report produced in 2016 by David Farenthold, for which he won a 2017 Pulitzer Prize. What he did was he was looking at the Trump Foundation. So this is related to the Donald Trump and the Trump Organization. The Trump Foundation was founded in 1988. Its dissolution was blocked by the New York Attorney General. It was allowed in December 2018, but investigations continue. The foundation was supposed to distribute proceeds from The Art of the Deal, that's Trump's book, to charities. fundraising, basically. None of the expenditures or activities were approved by the board of directors because the board of directors did not meet for at least 10 years. And the directors are all composed of the relatives of Donald Trump. Trump made the decisions alone. Solicitation of donations without a license. Foundation grants to the presidential campaign. Foundation money used to settle Trump organization legal disputes. Donations to other politicians, including Billy Graham, not our former minister. Funds used to pay partial assessment owned by the Plaza Hotel. Plaza Hotel was leased by the Trump organization. It's a Trump hotel. Purchasing goods and services for personal or business benefit. Diverting business or personal income to the foundation as donations, a form of tax evasion. Granting money to charities that rented Trump organization facilities, that's a conflict. Taking personal credit for donations made using foundation money. Receiving donation from Ukrainian oligarch during campaign for president. So if you want more on this, it's in Wikipedia. I'm sure you can find a more authoritative source, perhaps an archived article on the Washington Post website. And it reads almost like a checklist of everything that should not happen in a not-for-profit organization. The Banyan Charity scandal is another one. Here's the link to the CBC report from 2008. And basically, it was a tax evasion scheme masquerading as a charity. So a person could donate a certain amount of money to Banyan Tree, and they got a charitable receipt for significantly more than what they donated to Banyan Tree. And then the person claims that on income tax. Very illegal, and it's fraudulent. Financials. So now we move on to the financial side of things. Every year, territorial NPOs, or societies, submit financial statements to the society's registry. Frequently, these statements are rejected as unacceptable. How does one correct that? I think the way to correct that is by embarking on an understanding of financial statements, accounting for a society, and the use of basic accounting software. Now, I put in an example of GNU Cash. It's an open source program, but there are others. There's off-the-shelf commercial software, and one could also just use spreadsheets or even the manual method of ledgers. GNU Cash, my view is it's a vehicle for computer-aided learning, hands-on. It's open source and the license is free to use. One is not bound by the licensing agreements such as one finds in commercial software packages such as QuickBooks and Sage. And it is sustainable in terms of usage into the future and also into the past. There are some other packages which are open source, and this one is not. Version 5 is not. There might be others. Features of GNU Cash, it is double entry bookkeeping, and then it has various things in it. So you can look at that at your own leisure. If an NPO is dealing with large revenues, maybe it would be best to hire an accountant. This is just the homepage of GNU Cash. This web link is kind of interesting. It's an archived web link from the Minnesota State Bar Association. What they were trying to do was run, or at least teach their members of the bar how to run trust accounts using this software. So it's kind of interesting. I just skimmed over it. I'm not sure I agree with everything that they did in it, and that might be one of the reasons why it was taken off their website, but it has been archived. So if you are interested in this, it might be worth studying that. I think the SLAW legal blog also suggests that GNU Cash could be used to run a small sole practitioner law firm. So what is accounting? Accounting is the measurement, processing, and communication of financial and non-financial information about economic entities such as businesses and corporations, societies as well. Every NPO is a body corporate and specifically incorporated as a society, perhaps under the Societies Act, perhaps under other legislation. Incorporation means an NPO has legal personality and can own land, hold bank accounts, and standing before the court. Directors of NPOs have a duty to act in the interests. We've already gone through the fiduciary duties. There are financial reporting requirements. CPA, so that's the Chartered Professional Accountants of Canada, suggests a natural cycle for financial reporting, but in the Northwest Territories, there is in fact a statutory requirement for financial reporting in Northwest Territory societies. CPA cycle typically consists of a budget for the upcoming year, audit of the financial statements for the previous fiscal year, internal in-year financial statements to report on actual results versus budget, including year-end projections. You will probably find that the Law Society of Northwest Territories, which is a society established by statute, the Northwest Territories statute, but not under the Societies Act, it's the Legal Profession Act, follows this cycle. And of course, it also hires accountants to do its financial reporting requirements. For a territorially registered society, under the Societies Act, here are the meeting requirements as found in Section 17 of the Societies Act. An annual financial statement. So what is an annual financial statement? Well, it's a report of assets and liabilities in the form of a balance sheet. And the receipts and disbursements of the society since the date of incorporation and of the previous financial statement, and any further information that the bylaws may require. So it's very skeletal and very basic. And here are the filing requirements. Okay, 14 days after its annual meeting is the requirement for filing. And the list of directors has to be filed as well. And the registrar may actually require further information. I don't know if that ever happens. Does that ever happen? Yeah, it does happen sometimes. So there is a GNWT website on this, the Society's registry. There are PDF fillable annual notice of directors and instructions, and there's also PDF fillable annual financial statement with instructions. Do you only accept PDF filled out copies, or do you ink as well? Okay. Here's a snapshot of what's on their website. And so you can see that there's a society's handbook, fee schedule, annual financial statement, there's the notice of directors, and so forth. This is the PDF fillable financial statement document. You can see that we've got a balance sheet and income statement. So this is assets and liabilities. So this is the balance sheet, and the next page is the income statement. Consequences to file, well, you can actually get struck from the roll. The society can be revived under 28.4 of the Societies Act. Striking from the roll could be very awkward, and it may also expose directors to liability. Here's the extract of from the act of revival. Various other statutes across the country will have similar provisions, and sometimes it's called restoration.
We're currently doing 63 right now.
Pardon me?
We're currently doing 63 that are in the process of being struck with a file.
So you're striking out 63 right now?
Or in the process.
Or in the process of. So it happens. What is a financial statement? So a financial statement is based on the fundamental accounting equation, and you will find that listed here. It's also called the balance sheet equation, and it represents a relationship between assets, liabilities, and owner's equity of a person or business for each society. It is the foundation for double entry bookkeeping. For each transaction, total debits equal total credits, and it can be expressed as assets equals liabilities plus equity. Why have I crossed out shareholder equity? Because shareholder equity would be applicable to a for-profit organization, not for a not-for-profit organization. There are two methods of accounting, cash method and then the accrual method. So the cash method is just the cash basis, more or less your bank statements. The accrual method is a little bit different, and that is marked by things such as accounts receivable, accounts payable, and trust funds. We prefer to use the accrual method. Law firms should be using the accrual method. Law society uses the accrual method. Most businesses use the accrual method. Giphy codes were something that I was struggling with. It's a system for setting up accounts. It would only really apply if you have the misfortune of actually being required to make filings with CRA. So CRA societies don't normally file T2 corporate income tax returns, but they can file a partnership or information, or sorry, they can file a T1044 NPO information return. Here's some extracts from the Income Tax Guide on not-for-profit organizations. And this is when they are made required under the Income Tax Act to actually do these filings. And it all has to do with the amount of money or revenue that's being transacted by the NPO. So for example, if it received taxable dividends, interest, rentals, or royalties greater than $10,000 in the fiscal period, they file a return. And if the total assets of the organization are more than $200,000 at the end of the immediately preceding fiscal period, they file that return. If the NPO had to file an information return from a previous fiscal period, they have to file a return. Most not-for-profit organizations do not have that kind of revenue transaction going on. Certainly not the Amateur Radio Club, not the Pipe Band. Law Society, I have no idea. Not-for-profit organizations, so there's a blank form of the information return for your viewing interest. Looks very similar to, you'll notice it's just information for the most part. The objective of financial statements is to provide information about the financial position, financial performance, and cash flows of the entity. But it can also perform or be very useful in making economic decisions for the directors and the entity. So I'm looking here at international accounting standards, okay? And that's where these things are coming from. So they need to provide information about assets, liabilities, equity, income and expenses, including gains and losses, contributions by and distributions to owners. Typically a not-for-profit organization would not be distributing anything to owners. And then cash flows. It assists the users of financial statements in predicting the entity's future cash flow and in particular their timing and certainty. So if your entity, your society, your NPO is having cash flow issues, there's a good chance that there's a problem with the financial statements. So here are the types of financial statements. We've already seen the balance sheet and the income statement in the society's forms, but there are three other types of statement that can also exist. The statement of changes in equity or retained earnings, cash flow statement, and then the comprehensive income statement. There are various components. I'm not going to go into great detail on these because I don't think we have a lot of time for that. Oh no, we do have time. According to the International Accounting Standards, a complete set of financial statements includes all of those reports, plus notes comprising a summary of significant accounting policies and other explanatory notes, and then comparative information prescribed by the standard. So what you saw in the financial statements that are required under the Societies Act are bare minimum. They're just the balance sheet and the income statement. But a formal accounting process or standard could be much more detailed. And you will certainly find that in the Law Foundation financial statements when we look at them. An entity may use titles for statements. So this is an attempt to set up some sort of standard. And suggested line items, I think this is sort of similar to the Giphy codes that I mentioned earlier, but this is probably in the realm of accountants more than it is practitioners, and probably more than your average run-of-the-mill not-for-profit organization. For example, the Amateur Radio Club. And we've seen this form before. Now, the Law Foundation financial statements. So we can download the report for 2019 from this website. The requirement for the Law Foundation statements comes from Section 54 and 55 of the Legal Profession Act. The accounts of the foundation, that's the Law Foundation, shall be audited annually by a chartered accountant or certified general accountant appointed by the board. After the end of each year, the foundation shall prepare and submit to the executive a report consisting of a general summary of its transactions and affairs during that year and its revenues and expenditures during that year, an audited balance sheet, other information that the executive may require. So here's the financial statements for the Law Foundation. So we have a table of contents here. We can see that there's some introductory details, and then there's the financial statements. And you'll see that there's a statement of revenues and expenditures. So that's an income statement. Changes in net assets. It's probably another name for the balance sheet. Statement of financial position. There's a statement of cash flows. So we know that this is a much more detailed set of financial statements than is required under the Societies Act for your territorial society. Unrestricted fund. When you see the word unrestricted fund, some sort of fund that's been set aside, what you don't see is something called restricted funds. And in my reading, a restricted fund is what is a trust fund. And that's probably what these two are. The Graham Garson Bursary Fund, excuse me, and the Bailey Memorial Fund. So they've been prepared in accordance with accounting standards for not-for-profits. Remember, we were looking at the accounting standards earlier. While alternative accounting methods exist, management has chosen those it deems most appropriate in the circumstances. Okay. So the accountants are concerned with integrity and reliability of these statements. They relate to formal policies and procedures. Remember, that appeared in fiduciary duties. Careful selection of employees and appropriate division of responsibilities. Again, it's the board of directors of the foundation. And they had some interaction with the auditors. But at the same time, the auditors are independent of the board of directors. And there's the chair. So here's a independent auditor's report. Remember, independence. And I can't read this from here, and I'm not going to, but it's always interesting to read the fine print, or at least the introductory materials, because they often give some insight into what it is that you're actually looking at. So here's the first financial statement. It's called a statement of revenues and expenditures. So revenue, expenditure, that is a balance. No, that's an income statement, right? It's an income statement. Here we've got changes in the net assets. So you can see that this is doing a comparison over time. Then we have a statement of financial position, assets and liabilities. Now that is the balance sheet, okay? And you can see that liabilities, we've got accounts payable, and I can't read what that one is. Accounts payable and grants payable. So it's interesting that grants payable is is counted as a liability. Here we have statement of cash flows. So if we zoom in on that, we're looking at a comparison again between 2019 and 2018. And I guess you can get an idea of how things have compared in terms of the year. So it looks like at the bottom line for cash seems to be quite better than it was in 2018 for 2019. Here we have notes, and the notes are general, so they talk about the purposes of the foundation, accounting policies, and all that sort of stuff. More notes. Here's another form, or another report, another type of financial report, unrestricted fund. So now they're looking at an unrestricted fund, revenue and expenses. It looks like it's a separate fund that's being maintained. And this is, since it's looking at revenue and expenses, it's probably an income statement of some sort. This is another fund, the Graham Carson Bursary Fund. So these are trust funds. This is the Bailey Memorial Fund, another trust fund. Sometimes these are also called restricted funds. Remember, we were looking at another report that talked about unrestricted funds. If it's restricted, it has been restricted because it's to be used for a certain purpose. So it's a trust fund. So in conclusion, we've gone over the nature of an NPO, advantages of incorporation, income tax, considerations, corporate searches. We looked at a couple of examples. We talked about professional responsibility of directors, and in particular directors who are lawyers, their fiduciary duties. The compensation problem marks a significant distinction between directors of for-profit organizations and directors of not-for-profit organizations. We had a look at the different types of not-for-profit organizations. Jurisdictional issues were briefly covered between federal and provincial. We had a look at the Northwest Territories Code of Conduct for lawyers who are directors of not-for-profit organizations, the duties of directors and their accountability, directors' insurance through the Law Society of Northwest Territories. We just briefly went over that, but I do have a copy of the current policy that I can share with those who want to see it at the end. We had a quick review of the Trump Foundation case and the Banyan Tree case. And then we went through financials, the very basics of what is accounting, what are financial statements, filing requirements, and a quick superficial view of the Law Foundation of Northwest Territories financial statements. So, questions. I have a couple of questions for you to ponder. First question, is revenue obtained from a lottery scheme an asset or money held in trust? Glenn, are you capable of receiving answers?
I am, Ian. Yep. I'll check the chat and see if we get any answers.
Okay, well, in the absence of any answers, I will answer it. So revenue obtained from a lottery scheme, is it an asset or money held in trust? It depends on what the bylaws say for the city of Yellowknife. You'll find that a certain portion of the money received from a lottery scheme is allowed to be turned over to the not-for-profit organization, but also another percentage of the money that's received from the lottery scheme has to be held in trust, and it has to be used for whatever purpose to benefit the community. So the answer to the question is yes to both. It is an asset, and it's also money held in trust. Money held in trust, some people look at that as an asset. My own view is it's not really an asset, it's a liability. And when the money held in trust, it's not owned by the NPO, it's merely administered by the NPO in trust. In trust for whom? For beneficiaries that are not yet known. So when that money is paid out to the beneficiaries, then what's happening is that you still have a liability, but you are reducing that liability, right, to zero. So it's good to pay out money that's held in trust because you're reducing your liabilities. If I pay a beneficiary revenue from a lottery scheme, is that an expense? So it's the similar answer to what I just said. Money that's paid to a beneficiary from a lottery scheme, or it ultimately came from the lottery scheme, that is not an expense. What it is it's a reduction in a liability. So it would not appear in the income statement, but it would appear in the balance sheet. What happens to a Northwest Territory society if it fails to file financial statements for, is it 2 years in a row? For more than 2 years in a row. The answer to that question, it was presented in the presentation, one gets struck. Is there such a thing as a silent director? So that's a discussion question. My view is that there is no such thing as a silent director. Of course, it ultimately turns on what we mean by a silent director. When I hear the word silent director, I mean a director that doesn't do anything, doesn't show up. And an example of that is the directors in the Trump Foundation. A director has to show up to the meetings. That's part of their fiduciary duties. They have to be fully informed and fully engaged in what goes on the board of directors. So the answer to that question is no, there is no such thing as a silent director. Does director liability vanish if, excuse me, if the membership approves of the financial statements at an AGM? So that's the answer to that question is, of course, it doesn't. And because fiduciary duties cannot be extinguished by simply shifting the burden onto the membership. It just doesn't work. That's not the way things work. Is the standard of care by a director who is a lawyer the same for a business corporation it is for an NPO? And that's a major theme throughout this presentation, and the answer is no, they are different. That doesn't mean that ethical considerations on the part of a director who is a lawyer for an NPO are non-applicable. They are, but the standard of care is a little bit different because the director who is a lawyer in an NPO is also a volunteer. It ties into remuneration or lack thereof. Are all NPOs charities? What is a charity? So the answer to that question is no, not all NPOs are charities. The Law Society is not a charity. The Amateur Radio Club is not a charity. What is a charity? So CRA has some views on that in their interpretation of the Income Tax Act, but there is no formal legislation on what are charities. And again, that's an active project being pursued by the Uniform Law Conference of Canada. And it is also an area in the domain of provinces, not the federal government. So often when you see charities that claim to be accredited as a charity by the federal government, what they mean is that they are recognized as a charity for the purposes of the Income Tax Act. Okay, it's a very specific meaning. What if I, as director, ask for financial information and the other directors withhold it from me, saying that I have no need to know? So that's also a discussion question. It poses a series of interesting problems. I would venture to say that the problem with that is that, well, first of all, do you actually, as a director, need to have that financial information? Or is it too over the top? That's a very good question. So it's certainly worth discussing it with the other directors to find out why they think that it should be withheld from me as a director. If it is critical information to allow me to be fully informed as to the decisions of the society, then alarm bells might start ringing, and one should really wonder, why are they keeping it from me? And one should also remind the other directors that there is a duty of confidentiality and loyalty to the organization. What if the other directors insist that I sign a confidentiality agreement? Well, the confidentiality agreement is not really necessary, because there is that fiduciary duty of confidentiality anyway. So it seems to be superfluous. It's a good indication that the other directors may not understand or comprehend the fiduciary duties of a director in a not-for-profit organization. And you may need to put on your teaching cap to help them navigate through and learn about that. Suppose the board votes to do something illegal. I voted against it. What should I do? Well, there's all those ethical aspects in the code of conduct to consider. Again, it might be worth discussing that with the board members. Perhaps you already have and they weren't listening. Then you might consider a resignation, perhaps, or some other method of trying to sway the board to avoid going down that route. Are there legal implications to sending out an email to all members? So yes, there could be. And remember that there is anti-spam legislation that's administered by the CRTC. So if you are facing that, it might be worthwhile to remind yourself of the recent anti-spam legislation. So for instance, you have to get positive consent to send out emails to members. That has to be renewed periodically. There has to be in your email a method of unsubscribing and all of that. And that's part of a director's duty to comply with other statutes. So that is the end of this slideshow. Were there any questions?
Ian, there's nothing in the chat. We'll wait another couple of moments to see if any questions show up. In the meantime, I want to thank you and Matthew for making a guest appearance. And I appreciate the detail in which you provided for all of us. A reminder again as well that we are going to be putting the recording up on our YouTube channel, and also with the recording will be a copy of Ian's PowerPoint deck. Ian, do you want to speak to the declarations?
Yes, so what I've done here is I've changed the screen and we're looking at the declarations. Just give me a second here. So in the declarations, you can see here that we're looking at the Law Society outside directorship, liability insurance. So outside directorship is a critical term. And you can see that it's still current, at least until the 1st of July. So I imagine there's probably a renewal going on somewhere. And you can see the amount. So it's up to $1 million for each loss, $3 million for the entire policy period. And if we go to some of the defined terms in the policy, it helps provide some insight. So insured means all paid up members of the named insured. The named insured is the Law Society. We can see here outside directorship means the position of director, officer, trustee, governor, or equivalent persons duly held by any insured person in an outside entity for which the insured person may receive nominal remuneration, consideration, or an honorarium provided by the insured person is not also a partner, salaried employee, or salaried officer of the outside entity. So you can see that this is specifically directed at not-for-profit organizations, because it says and provided the insured person is not also a partner or salaried employee or this is that remuneration aspect of the outside entity. Okay, so the outside entity means a corporation, organization. So society isn't actually mentioned there, but I think organization would probably meet that definition. It's not a defined term either. Charity, trust. Certainly, a lot of not-for-profit organizations have trusts. Or entity, so it's very general, entity, including any subsidiary thereof, which is, yeah, so wrongful act, alleged error, misstatement, misleading statement, omission, neglect, negligent act or breach of duty of the insured person, individually or otherwise, in his or her capacity as the director, officer, trustee, or general partner. So this is actually the policy that covers you as a director of a not-for-profit organization in an outside entity. Why do you think that for-profit entities have been omitted? The answer to that is probably because that's a cost of doing business. That would be for the for-profit entity to get the director's liability insurance. The benefit of this policy is that you as a lawyer, serving as a director on a not-for-profit organization, is that even if the not-for-profit organization does not have liability insurance, you do anyway because of your coverage through this Law Society insurance program. Glenn?
Thanks, Ian. And I can tell you that, in fact, that insurance policy has been renewed, and we will be receiving our new policy next week. Still no questions, Ian. So at this point, I'd like to thank you again and thank Matthew for the presentation. And thanks, everybody, for participating this afternoon. A reminder again that we will be posting this on the YouTube channel, and you'll be able to see it, and you'll be able to see Ian's PowerPoint presentation sometime this afternoon. Thank you, everybody, once again. Enjoy your weekend.
Thank you.